In the broadest terms, mergers and acquisitions involve the sale of all or part, such as a specific division or particular asset, of one firm, which is termed the target or seller, to another, generally referred to as the acquirer or buyer. Investment banks normally play a key role in M&A transactions in terms of putting deals together, carrying out due diligence and valuation analyses, and in sourcing or providing debt and or equity financing to pay target firm shareholders for their stake. As we can see in the schematic, M&A is a critical element of firms' corporate finance strategy, who may consider public offerings or take private transactions as alternatives. Economically, M&A, in theory at least, facilitate the more efficient use of real assets, thereby playing an important role in economic growth and wealth creation. Looking at transaction types and the key terms used to describe them, acquisition itself is a broad term used to refer to the purchase of all or part of a target firm by the acquirer firm or buyer. More specifically, mergers can take specific forms, often with particular legal and regulatory requirements, but in all cases the transactions involve a target firm being bought by another firm. In a statutory merger, which we can see in the schematic on the left, the target firm ceases to exist after the takeover transaction and is subsumed into the acquirer firm, which naturally, of course, increases in size. Subsidiary mergers, shown in the middle diagram, are where the target firms become part of the acquirer group of companies, as is often the case where the target firm has a strong brand. Consolidations, in the right-hand side of the slide, are where two firms combine into a new corporate entity, and both the target and the acquirer firms cease to exist. This is often the case where the two firms in a merger are of roughly equal size. Special purpose acquisition companies, or SPACs, are new companies listed on stock exchanges, having raised equity capital to fund the purchase of an as yet undetermined target firm.